Dan Rosen with Luxor. You're like the third?
Yeah, at least third. We had Matt. We had, who was the other one we had on there?
We had somebody else.
Yeah,
You had Colin Kelly.
Yeah. And Matt
I know Matt Lusto when he was at.
Yeah.
That's right.
Was Aaron Foster, was he on there as well?
Oh, yeah, we had Aaron on there too. Forgot about him.
So like the fourth, I think the fourth person?
Yeah. Fifth, yeah.
Aaron, yeah. Well, shit. Yeah, we definitely need to call Ethan.
We've pretty much had the entire Luxor gang on.
We're like a Luxor commercial now at this point. Yeah, man. Well, glad we could have you on there. When did you join Luxor?
I joined coming up on a year ago.
Nice.
Middle of May of last year. So
What were you doing before that?
Yeah, joined. So I was a long-time options market maker and trader. So I was based in Chicago for 11 years, and then spent those 11 years as a market maker on US Treasury options, and came over to the Bitcoin space as a market maker on Bitcoin and ETH options. Was kind of my initial start into crypto. Did a deep dive into Bitcoin and all things crypto, and kind of decided to stick with the Bitcoin side of things.
Yeah.
So options nerd background, totally.
Did Matt pull you in since he's a Chicago guy?
Yeah, we actually didn't know each other before.
Oh, okay.
Oh, you didn't?
Before Luxor. No, we didn't know each other, but it worked out that we both had kind of similar trading backgrounds.
Are you a Malort guy as well? Like,
it's pretty gross.
It is.
We still have an almost
yeah.
entirely full bottle in the studio.
I'm
It's
sure
untouched.
Probably mostly untouched.
Untouched except for what we did during that episode.
God, that was terrible.
This stuff was brutal, man.
Yeah.
It still tastes a year.
It was like black licorice, like except went through sewage or something. It was terrible. It was horrible.
I think somebody, I can't remember somebody, because I listened to that podcast, that episode, and I think one of you guys said it tastes like wood cleaner, and I think that's pretty accurate.
Yeah, it's not good. Not good.
Yeah,
not good.
Matt wanted me to send you another bottle of Malort.
No, we appreciate.
But I think you're set for the next. For the next 5 decades.
Right. We will probably never need to buy another bottle of Malort ever. That's a guess. We'll play tricks on people. Next time my son asks to take a drink, I'm going to give him a drink of that. Like, he'll never drink again.
That's right.
Here, taste some of his butt, Jackson.
So Dan, what do you? So you're working with Matt on the derivative side at Luxor?
Yeah. I'm working with Matt on the derivative side. I'm more involved in kind of the business development, trading, execution, some operational stuff as well. So, it's a very small team. There's just 3 of us, Matt, myself, and colleague Ben. And so we all kind of do a little bit of everything.
Well,
it's a timely conversation.
I was going to say it's probably ideal time to have this discussion with hash price being at, basically all-time low. Just kind of looking at what people did right after the halving. We just got through the halving, a week or so ago, a little over a week. We saw that crazy run up after all the runes stuff was going on, which I don't know how familiar you are with runes and what it is. If you are, I'd love to have you be the first person to talk about it a little bit, on here, because we haven't had anybody really come in and discuss it. I myself am wanting to do a big deep dive into it to try to get more familiar with what it's all about and what happened and how that might be actually kind of a precursor for the future of mining and part of the mining revenues and all that, which would obviously be good for miners. But do you feel comfortable talking at all about runes and what that was all about?
No.
Okay.
No, not really.
Okay. I'm not against you because I'm not either. I don't know.
Yeah, I kind of feel. I think I echo a lot of your sentiment there. Kind of. I wish I knew more about runes than I do currently.
Did you guys foresee? Sorry. Go ahead.
No, I was just going to say. I wish I had a deeper knowledge. I've done some reading about ordinals in general, but when it comes to specific runes protocol, my knowledge is pretty shallow. So
yeah, well, we're gonna get Charlie on here. I was talking to Charlie Spears the other day.
I was gonna say that's your guy.
Right. So
Charlie's got to come in person.
Yeah, he wanted to do it remote. I'm like, dude, come on.
Charlie's got to come. Charlie.
Yeah,
he's not that far away either.
No, he's not that far. And I asked him, I was like, when you come to Houston, I'm too busy. This, that. I'm like, He's Charlie's just blowing up, and he's too big for us now. He doesn't want to talk to little old us. But yeah. So I'm gonna work on getting more familiar with it. But we saw that crazy run up. Did you have a flood of miners looking to maybe hedge at that point?
Yeah, it's a good question. I think leading up to the halving, a lot of the counterparties that we were talking to, we have something like 60 counterparties onboarded to our platform. Almost everyone wanted to kind of just sit on their hands and wait to see what happened during the halving. And so the halving happened on, what was it, Friday night, I think it was. And so, yeah, we operate on the weekends, but usually not as actively as during the week. So we kind of hit that 180 hash price, I think on Saturday it was, sometime Saturday or early Sunday. And so, yes, when we came in kind of Monday morning was when we kind of had a fair number of miners say, hey, at least checking where the market was.
Right.
We executed a few trades kind of on the way back down. But I can't really say exactly kind of what those prices were.
Yeah.
But, we did execute prices kind of on, not at the full 180 hash price, but somewhere between 180 and now where we are at 50, call it, or sub 50.
Right.
So
how far out?
There are definitely some.
Oh, go ahead. I keep interrupting.
No. That was it. No, go ahead.
How far out is the market, like your guys' market? How far out, if I came to you, could I have, I guess, bought some futures or whatever?
Yeah. So currently our expirations are, we have these kind of standardized monthly contracts, but you can do anything custom or bespoke duration as well. So you can say, hey, let's start May 13th and go to June 20th as well. But our contracts go out as far as 6 months now.
Okay.
There are plans to go out as far as 9 or 12 months in the somewhat near future. And that I think will be hugely beneficial and, kind of bring us more in line with what traditional commodity markets look like. But 6 months is as far as we go currently with the forwards, the OTC forwards.
Has it been a slower week this week as far as people wanting to lock anything in? I'm just saying what my guess would be. My guess would be right now there's probably not a ton of people looking to hedge anything, just because we're kind of at an all-time low. It could get worse, and I think that's just the reality. We all got to understand.
Oil went negative 37.
Right,
we never saw that coming.
Yeah, we've been
that was
in this
March
world
2020.
For a while. Right. So, we know that it can get worse, and I think in all actuality, it's going to get a little worse. Like we saw a big run up on price over the last few months. Like having a pullback in Bitcoin price obviously is not unheard of. If it was, then you guys wouldn't probably have this market. So I think there's a good chance that we go even lower. I don't know what it'll be. I wouldn't be surprised if we got in the low 40s, but like I think probably 5-6 months from now, hopefully we're seeing things start to claw back up, and it might pick up at that point. But I guess right now, has it been kind of slower this week?
Yeah, I think from the miner side, they're not looking to necessarily lock in hash price for the next, say, 2 months, 3 months at $47.
Right.
But I think you're totally spot on. Bitcoin price, we're sitting just under 60K, right? If we do go down to, let's say, 50 or low 50s, we could see hash price in the low 40s or maybe even slightly lower than that. And at that point, there's always a lag between hash rate coming offline and hash price actually, resetting and kind of getting that negative difficulty adjustment. So, yeah, you could see $42 hash price if Bitcoin price dips here even further, 10% lower, and that'll hurt for a lot of miners. I always kind of reference like, what does a JPro break even look like for hosting? So if you've got a JPro that you're hosting at 7.5 cents per kilowatt hour, your break even is somewhere right around $54 hash price.
Okay, 30. So say that one more time. It was choppy on our end.
No worries. So if you're hosting a JPro at 7.5 cents per kilowatt hour electricity costs, your break even hash price is right around $54, $55.
Okay.
And so if we're sitting at $47, you're operating pretty unprofitably running that JPro. that's being hosted. So
Yeah.
I do think kind of if we hang out around here, $47 hash price for, a few weeks, you will certainly see hash rate come offline.
Yeah. Yeah. Yeah.
So it goes back to the pod we just did with Mehdi,
Right.
of getting the cost down as low as you absolutely possibly can, which is not news to anybody, but I think it's definitely in the forefront of people's minds to be able to optimize on the power side, because what are you gonna do on the hash rate side?
Oh man, well, and what's crazy to me, this is the first halving we've had from the visibility standpoint that I think we have in the market now. 2020, our last halving, that was really before you saw all the attention go to Bitcoin to the level that it has, where you had a bunch of new groups that want to pop up and start mining companies, and now some of them have grown to these behemoths. But now it's just a lot more visible, and I think people understood the halving, and so there's a lot. I think that it's going to be really interesting to see how this all plays out from like a consolidation standpoint, and watching some of these big miners that have grown over the last like 2-3 years. What are they going to do if we start seeing some hash rate come offline, which I think you have to at some point, even if it's some older machines that are coming offline. And they will ultimately get replaced with newer machines. But I think that instead of the money all being spent from these big miners that are just trying to grow, and you got all of them trying to grow, I think I at least am anticipating them taking their capital and actually buying up some existing operations. So maybe that slows down the difficulty increase. I don't know, but have you guys thought about any of that stuff, or kind of where are you guys? Where's Luxor's mindset going with what's going on in the market right now?
My personal take on that is I think you do see kind of consolidation in the mining industry over the next, say, year or so. But that definitely takes the form of, if you're a large public mining company, for example, and you're acquiring new sites from kind of defunct miners, you need to still have new equipment in order to enter into that site, right? You can't just be scooping up JPROs that they're selling unless, hash price happens to, whether we get a Bitcoin price rally or a huge negative difficulty adjustment over several epochs. You can't just go in there and run JPROs. You need to have probably, XPs, Kpros at the very minimum, and probably more likely S21s or similar kind of immersion kind of technology. So, I think it's super interesting. And this is one of the most interesting things that I find about kind of Bitcoin and Bitcoin mining coming from the trading world is the game theory that goes with Bitcoin mining, and how you make decisions based on potentially some of your other competitors doing certain things too, whether it's the halving, whether it's improving your fleet, finding kind of access to cheap energy.
Yeah. And that is actually kind of why I think there could be some consolidation, because yes, there's still opportunities out there for cheap energy, but the lead time on them is longer than it used to be, I think, at least what I see. And I think it's just because there's a lot more competition for these spots, and there has been over the last few years. And so now it's like, all right, it's like oil and gas. This is another correlation to oil and gas for me, is that you saw a big wave of consolidation in the oil and gas world, over the past decade. And I think a lot of it is to do with there's not a ton of new plays coming on. You know what I mean? There's a Permian, but there's not like another new Permian that anybody's found that allows you to go just buy acreage and drill wells. In Bitcoin mining, it's like, okay, there's a new site. I can just go buy that site and I put new machines. Now it's going to be, okay, for me to replace the wedge that is going down, declining production, right? Declining hash rate over time, or the value of that hash rate declining because new stuff comes on. The way for me to replace that is it's easier to go buy a company that exists right now rather than it is for me to go find some interconnected, power facility that has an extra 200 megawatts sitting around that I can energize immediately. You don't have a ton of those anymore. And so, yes, they will be, but it's going to take you 18 months to get online. So that's why I think it could be a pretty exciting summer to watch some of the stuff that I think is going to happen. I do think some of that is going to occur, and I don't necessarily think it's a bad thing either. I think, in a way, from a theory standpoint about we want decentralization, we want all this stuff kind of accumulated with single operators, but from a standpoint of like, let's solidify the companies that are strong and like let them kind of take on some of the other ones that are faltering. I think it might be good in the long run. And I think it's gonna be harder and harder after this for new behemoths to kind of pop up. I don't know. What do you think, Dan?
Yeah, I mean, you definitely see some of the public mining companies who are flush with cash too, whether it's in the form of Bitcoin or US dollars, right? And so I think they have, whether they've raised more equity or raised debt in advance of this potential opportunity. I think there has been, I think the initial estimates for how much hash rate would come offline post halving was somewhere in the, probably on the low side, 3 to 5%, and on the high side, maybe, 15 to 20%. I think that would still be pretty large if we get, 120 exahash that comes offline. That seems pretty crazy. But, we could definitely get easily down below 600 exahash, maybe 575 or something would seem pretty reasonable. So we're down 10%, especially with hash price at $47. And that would put a lot of miners out of business if we stay at $47. So I think it'll be really interesting this summer, like you're talking about, how this plays out. We get $47 to $50 hash price for the next month or so. Well, a fair amount of hash rates definitely coming offline. Right. And then you get summer in Texas too with curtailment in July and August, right? And so what does that look like for hash rate for the next really May, June, July, and August? What does that look like?
That's a good point. I have not thought about that. Yeah. That could probably be a bigger factor on tanking the difficulty rate. Like temporarily, right? You'd probably only last through the summer, but that's actually a very good point. I didn't think about that. Yeah, I think you could probably see a lot of reduction on that during the summertime.
Yeah.
That'll be interesting.
Yeah. So between those two, you get, difficulty down, 10% or something, 10 to 15%, and hash price is back up to $60, $65.
Right.
And then I think you maybe see a rip in hash rate on the network back up to, 700 plus at some point.
Yeah. Man, so what about machine? And I know you're the derivatives guy, but what about machine prices? You think we're going to see?
Yeah.
Like logically, right, over the past 4 years anyway, it's typically like those machines are priced at like a 12 to 18 month payout, basically is what it seems like. Is that going, and they don't move shit down as quick as they move it up when prices rib. So I know there's going to be a delay in this time frame, but like if we hold at say $40 to $47, even $50 hash price, where do we see the machines going at that point from a cost per terahash?
Yeah, I've talked to a couple of the guys on our ASIC desk, like Colin. It sounds like the newer gen machines, so like the S21, those prices are staying very steady around. I don't know if it's somewhere between $18 to $20 per terahash. When you're talking about older gen machines, and I'm talking kind of S19J Pros and older, those might see a flood of kind of supply on the market over the coming few months. And so those prices, which are currently, I think, somewhere around $5.5 per terahash, might really see kind of a lot more pain to the downside as kind of supply hits the market.
Right. Okay.
So who knows? That could be an awesome opportunity to scoop some of those, but there's definitely probably a lot of people looking to offload those older gen machines.
Yeah, I think so too.
Yeah.
I've actually had a call about people looking for some, but the price that they wanted to pay was absurd. So it's like, I mean, we're not giving you machines for free, basically. Okay, sorry. We haven't got there yet.
Some people just want to pay for shipping.
Right.
That's it.
Right. Yeah. So, well, yeah, man, I'm really excited for this summer. As much as it sucks, I'm not as exposed to the hash price market as like I used to when I was at Jay. And so it's easier for me to step back and be like, yeah, I mean, I got some miners running, so I definitely want, price to come up. But it is an exciting time. I feel bad for the miners having to kind of weather the storm right now, but it is exciting to see like what's going to happen in this kind of much more matured market and industry for the first time going through a halving with actual capital behind them and like public players that could go. It's going to be kind of fun, especially being an attorney that works on transactional work. Miners, let me know. You know, we're available to do any type of deals you want to do. So a little shill from me.
Yeah, totally agreed. It's I you know, like I said, I've been in the space for about a year, specifically Bitcoin mining, and it's always interesting, especially when you're looking at kind of like a forward curve for hash price and what the market is expecting hash price to be into the future. Not to say that the market's right. The market's usually wrong.
Right.
But super interesting to see kind of what at least some market participants are pricing.
Yeah, what is the forward curve look like currently?
Yeah, so it's actually slightly in contango, meaning like the future prices are higher than current spot prices, but not a very steep contango. So like if you're looking at, so I'm looking at it right here. So if you're looking at like the May market right now, you're talking somewhere around 47 to 48 bucks is kind of reflective. The market's saying, hey, we think hash price is going to be pretty steady over the entire month of May, right around where we are right now. But if you look all the way to say August, September, you're getting slightly higher prices. And so there's two kind of parts at play there. One is potential difficulty, negative difficulty adjustments that the market's pricing in. And then also just Bitcoin price futures. So Bitcoin futures prices are higher than where spot Bitcoin prices are. And so the market is also taking that into account. So yeah, ever so slightly higher for the next few months. And I think that's probably likely, but not necessarily guaranteed.
I'm kind of curious on this. If Bitcoin futures are always in contango, does that mean the hash price, do they always trend the same or no?
Yeah. Generally our markets are in backwardation for hash price. So futures are lower than spot prices. But even with that Bitcoin futures curve in contango, you still get backwardation in our curve most of the time. I think this is pretty unique situation where difficulty is kind of overruling obviously the hash rate growth. And so I think the market's kind of pricing in a couple of negative difficulty adjustments over the next two epochs, especially. So, I mean, we're kind of on pace for something like a -2, -2.5% difficulty adjustment. We're about halfway through the epoch right now, and I wouldn't be surprised if we see another one of those kind of small negative difficulty adjustments at the next epoch. So,
yeah, how much has your guys' desk grown? I mean, I imagine quite a bit because they brought you on as well, and I think that there's probably was a lot of people looking towards the halving and thinking about kind of a derivatives strategy that they could use going forward. So has it grown a lot since, say, we had Matt on? I mean, that was probably almost a year ago.
Yeah, over a year ago. Probably.
It's probably around a year.
Based on how short Matt's hair was then and how
long it is now.
It is now. Hair growth. Over time, I'd say
that's true. Man, that was a very good analytical kind of standpoint.
He might have aged like 10 years in the last year or so, but
his hair is in
contango. Yeah, his hair's in contango.
Yeah, yours is definitely in backwardation.
Yeah, mine's in backwardation.
Yeah, he looks like a Hashrate Jesus now, but and he'll hate that too. But we, when I came on board a year ago, we were doing, we were definitely doing some larger trades, but most of the trades were 5 petahash, 10, 25 petahash size trades. In Q1, we were kind of consistently doing 500 petahash to 2 or 3 exahash size trades.
Wow, that's great,
so
man.
We're definitely growing volume, but also just general liquidity in the market is much larger than it was a year ago. So, you can comfortably execute 2 to 4 exahash in the market at any given point in time for really any duration.
Dude, that's freaking great. That's good to hear. I like that. Yeah, that's another sign of a maturing industry,
Yeah, 100%. And this is kind of what's existed in traditional commodity markets for so long. And so it's not like we're reinventing the wheel for Bitcoin mining and hash rate as a commodity. It's really just porting these derivatives and these tools over to Bitcoin mining. It's super cool to see, and compute as a commodity is I think growing in terms of how people are thinking about it, and not only that, but Bitcoin miners and how they think about hedging their risks has grown tremendously. So we've seen all sorts of different use cases for using our markets, whether it's getting just non-physical exposure to mining. Rather than deploying physical infrastructure, you can kind of synthetically buy hash rate through our non-deliverable forward contract. Or we've seen kind of some other companies look at it as a way to replace hash rate or buy hash rate when they don't yet have that hash rate online. So they know they'll have infrastructure in 6 months from now. Hash price is $47. Hey, let's buy an exahash or 2 exahash because I think the upside potential is the upside reward is much larger than the downside risk. And so we've kind of seen a lot of those different use cases, which is really cool, not just as a miner hedging tool.
When you're technically buying hash rate, are you essentially redirecting that hash rate to your pool?
Yeah, so we actually have 2 different products, and probably Matt would have not discussed this last time, but we've had this non-deliverable forward, which is a cash settled product for about 18 months now, maybe even closer to 20 months. And that looks a lot like it would be like a non-deliverable like oil futures contract. And so just on a daily basis, it's settled to our index. So we look at, hey, what did hash price average over this entire day? What was your purchase price or sale price? And we mark to market your position on a daily basis. And it's either settled in US dollars for our US dollar contract or Bitcoin for our Bitcoin contract. What you're talking about is more our deliverable forward, which is physical hash rate being delivered. And so we do have a deliverable forward, which is all done through Luxor's pool infrastructure. And so it is miners that have hash rate on Luxor pool looking to sell forward their future production of hash rate and get capital up front for it on day one of the contract. And so this is hugely useful for miners that are, looking to expand their operation, whether it's buying more ASICs, buying infrastructure, putting down deposits for PPAs, et cetera. And it allows them to get that capital up front and in exchange deliver hash rate in the future.
And you guys are putting a premium on it, I'd imagine, right?
Yep, exactly. So those miners are usually selling that hash rate at something like a 14 to 15% annualized cost of capital or discount to kind of expected price.
But it's better for them because they're not having to put up, their collateral is the hash rate, right? Basically.
Yeah.
Right.
Yep.
And they're not having to go out and try to finance something and collateralize it, collateralize their machines or whatever, I guess. Because, 14, 15% is still a healthy clip, but looking at the cost of capital, if you finance stuff here, it's a better deal to go with y'all and do that.
Yeah. And we see a lot of like small and medium sized miners do this and kind of roll the contract every 2 or 3 months. So, hey, let's sell, 50 petahash or 100 petahash forward for 3 months. I don't know what the number is. Let's get a 200K worth of Bitcoin. Let's buy more ASICs, deploy those ASICs, and then deliver the hash rate for 3 months, and then do that contract again after 3 months. And so it allows them to kind of continuously scale over time. Yeah.
Okay. Man, that is awesome.
Do y'all ever plan to expand beyond y'all's pool into other pools, and why or why not?
Yeah. Ideally, yes. I think in practice, it turns out to be pretty difficult.
Yeah,
it's you kind of touched on hash rate as the collateral for the trade, but we do a full credit profiling for every miner that goes through these trades, and that to be honest, that is one of kind of the major risks, and Luxor does assume that risk in those trades, and we need to feel confident that miner will continue to deliver that hash rate over time. And be able to, we don't have ASICs as collateral or some sort of other security or asset as collateral. And so we need to be pretty sure that that miner we have a previous relationship with them. They've been mining on our pool for some period of time. So we have some sort of data historically. They, have always paid their bills with our ASIC desk, that kind of thing. Just the typical credit profiling that you would go through for any kind of loan that you would extend. And so I think once you get to a different pool, it gets really difficult to feel comfortable with that when that hash rate is not on your pool.
Right.
Okay, so explain to me if I'm a potential customer, and you've got these two products, what goes into the decision-making product? Like, why would somebody use one product over the other product?
Yeah. So for the deliverable forward, I think the main point really is I'm a miner. I want capital upfront because I want to do something with that capital. Like I said, purchase ASICs, PPA, whatever. The other product, the non-deliverable forward, really is a hedge product. And so the miner actually puts up capital as margin in order to enter into that trade. So I think those are really the two kind of evaluation points is, do I need capital right now, or do I have capital available to hedge and to put up as margin?
So that's
and obviously kind of that. Yeah.
That's a revenue
Sorry, go ahead.
play. Well, I was just saying, it's just a revenue play versus like we need some capital at a better cost right now. Yeah.
Right. Lock in revenue or need capital right away.
Right. It's just, that's huge for miners, man. I mean, I know we've talked about it a ton on here with, not having a hedging market. And look, I love what you guys are doing. It's still not as robust as like an oil and gas kind of hedging marketplace that's out there. It's a different type of commodity that doesn't have the same demand or required use for it like oil and gas, obviously. So I think there's just some inherent differences there, but I do want to see how this kind of progresses over the next year. Like we had Matt about a year ago, and obviously it's grown just from the scale on your guys' side, but I am anxious, like where do you see things going over the next year, 2, 3, 4 years? Do you see they're becoming more of a, like Jake brought up, are you working with other pools? How could this be implemented as a strategy for the entire industry, not just folks that are on the Luxor pool? And is there a way for like you guys to basically handle that whole marketplace regardless of what pool is being used?
Yeah, it's a good question, and I don't know if you've actually heard, we're launching futures. And hopefully the very near future. And so we're hoping, I think you kind of hit the nail on the head with this. Doesn't look exactly like a, say, for example, oil futures marketplace, right? You don't necessarily have natural buyers of hash rate. You do have natural sellers, miners that are looking to lock in revenue, but you don't have kind of a natural consumer of hash rate. And so, but at these like lower hash price levels, you do see many more buyers typically than you do see sellers or hedgers. But I think where this is going with the launch of the futures product is really kind of bringing this more to an institutional grade. So right now, everything is OTC with the forwards. Everything is done through Luxor, and Luxor is your counterparty, whether you're a buyer or seller of hash rate for either product. And so bringing this to an exchange where the counterparties will interface with an FCM, which is a futures commission merchant, and essentially a clearing house that has no Luxor counterparty risk, really brings this kind of, I guess, into the big times. Like this is a real product that is listed at a US CFTC regulated exchange, or will be soon. And I think that brings us kind of is a huge leap. And Matt will be super relieved when this product actually launches, because this has been his baby for the last 18 months or longer since he arrived at Luxor.
Nice.
I think it's super exciting. I think more on the topic of the future, obviously kind of top of mind for everybody is, for a lot of miners now entering into diversification into the AI space, and then AI people kind of coming more into our space. Does Luxor stay pure play Bitcoin mining, or do you guys diversify into just kind of broader compute? Obviously, as demand is kind of through the roof kind of currently, and there's obviously like tons of growth opportunity there.
Yeah, I think that's a good question. I don't have a great answer for you. I think we kind of always have to keep our eye to the future and what kind of potential other business lines there are. I think it'd be foolish not to evaluate that on a consistent basis and see kind of what other opportunities there are there. And so I know the executive team is always kind of looking at that as potential opportunities. It's kind of the same thing. When you look at the hash rate market, and I think this was an interview that was it Sam Altman had with Lex Friedman on his podcast, and talking about what the future looks like, and talking about compute as a commodity. Obviously, not specifically talking about Bitcoin mining, but general compute as a commodity, and how that will be the most valuable commodity in the world at some point in the future. And so whether it is Bitcoin mining or whether it's kind of HPC or AI, I think you have to continuously evaluate all these opportunities. And I think these markets for compute and for HPC will be super interesting and potentially look a lot like they do for Bitcoin mining.
All right, personal question. Because you sound very knowledgeable and you came from a more traditional kind of finance background and job. What did your family say when you're like, hey, I'm going to bounce on this and I'm going to go start doing some Bitcoin stuff?
Yeah, good question. My parents probably thought I was a little crazy.
Yeah.
Fortunately, my wife's always had the steady job.
Yeah.
And so I worked for a trading company for about 8 years to start my career. And then I left to go start my own trading operation. Literally just me and a developer.
Yeah.
And so kind of took a big risk there. And fortunately, it worked out just fine. But I've always been the risk taker of our, say, dual income household family, right?
Yeah.
And so my wife has always had that steady job, and so I've kind of always been, let's go find the next really cool thing out there, and this was definitely it.
Yeah, nice, yeah. I always appreciate guys that come from more traditional backgrounds jumping into Bitcoin stuff. It's just makes it fun.
Yeah,
man.
I mean, at face value, it's perceived by most as risky, right? To come from something that's a tried and true, proven market into something that's it's a little bit like wildcatting. You're kind of gambling. It's like where all does this go? Obviously, different once you have the conviction, you believe in where it's going, but especially entering into the space.
Yeah, well, and the hardest part is just convincing. At least for me, is like it wasn't the fear for me. I'm like, I'm down. I think it's the future, right? But it's like going, and especially being a husband and a dad, and be like, hey, so by the way, I'm going to go. I know this has been really good for us for the past 10, 15 years. I'm going to scrap all that because all that shit's going down, and I want to move into this thing that's going to be the future. And yeah, it can be tough. So, but I think that's what I like about this industry, is that then all the people that you're really working with, you already know they got balls because they're putting them on the table and they're going to go after something. So it means you're probably around a lot of like-minded people that provide a different skill set. Like you guys, kind of derivative game and finance guys. I don't know shit about it. I'm a freaking dorky attorney that is just trying to get some deals done. But it's like you've got the bold streak and entrepreneurial spirit. Otherwise, you wouldn't be getting in here. So I like it, man.
Yeah, totally. And I'm just the options nerds that's trying to build out hash price markets. But it's I think it's really cool, to see all these people coming from all different walks of life to kind of build out this industry.
Right.
And I think that's something that we're continuing to do. And you just look at, say, public mining companies and the expertise that they're bringing in. Like I said, they're finally starting to kind of understand these hash rate derivatives markets and why they're important. And so, they're bringing in, experts from the trading world, from capital markets world, from finance, from, electric engineers and kind of all sorts. It spans the entire gambit of who they need to bring in order to make this space and their company successful. It's just pulling from all these different directions and levels of expertise.
Yeah. And it's funny because I always do compare Bitcoin mining to oil and gas industry, but it's like we're getting to watch what happened in the oil and gas industry over the past 120 years is occurring in Bitcoin mining in a span of like 4 years. Like it's crazy.
Super rapid innovation.
Oh my gosh.
Which is what's
incredible
so exciting.
Right. Yeah. So what makes it fun. And because I remember when we first started doing the show, it was like, man, there's no hedge market, until there's a hedge market. It was like,
that was like one of our first conversations when we first met like 3-4 years ago. Yeah. We were hosting an event. It was an offsite thing in Austin. And we were like 20 drinks deep after golfing all day. And we're like, there's no hedge market in the space. There needs to be a hedge market.
Right. Yeah. It's like until there's one, this industry will never grow the way it could until there's a hedge market. And it's like, now you guys are doing some of it. I bet you Ethan heard us talking about it.
That's what it was.
Yeah, so you guys you're welcome.
For sure.
No,
great idea, guys.
I think it's obviously very needed, and it's going to continue to grow, and you guys are going to continue to develop it and expand on it, and bringing in talented people like you and Matt is it's a really kudos to Luxor for taking on the challenge. And that's one thing about Luxor in general that I appreciate is I feel like you guys are always innovating from a standpoint of services that are offered and different ways to enhance the miner's ability to capture, revenue and capture kind of arbitrage things and like really protect themselves. It's good for the whole industry.
Yeah, I think a lot of people, there's, for certain businesses, there's a lot of power in being hyper-focused and maybe making one product and doing it really, really well. But I think also, because our business is the same, where you have these more like platform businesses where it's like the same end users, but you're able to tackle a larger set of problems and be world-class at all of them. And I think that Luxor is one of those companies, and the ability to ship new things by, for one, launching this with you and Matt, and then what they're doing with Charlie on the ordinal side, and it's like, and then Colin leaving the ASIC desk, like it's just it's the same end users, right? The same customers, but
Charlie
being able to solve one.
On him, man. Didn't he? Yeah.
Yeah. I think Charlie left a little while ago, like sometime around a month ago. I don't know exactly when.
Oops. But
I didn't know that.
But
still, yeah.
All good.
Yeah, no. I mean, I'm sure he's still a friend. Charlie's just been blown up, dude. And I mean, entrepreneurial spirit. That's the hard part about this. But again, looking back at oil and gas, you look, it's probably a group of like 20 dudes really when they got going. They all knew each other. Yeah. And they all started doing their own thing, going separate ways. But that's what builds the ecosystem too.
Yeah.
So
yeah, absolutely.
Yeah.
Love Charlie. And generally speaking, like I said, coming up on a year here at Luxor, just really generally impressed with the level of talent at Luxor.
Oh yeah. Man.
People that don't perform definitely don't last, but generally speaking, like it's really high quality people that are really good at what they do, whether it's engineers, product managers, on the ASIC sales desk. Everyone is really good at what they do.
Yeah.
And, even coming from a trading background where things get done very quickly because time literally is money for trading and development, products get launched really quickly at Luxor, and they're usually pretty good to start with.
Right.
We definitely iterate on products over time, but I've like I said, just really impressed with kind of the level of talent across the board.
Oh yeah, man. I mean, Ethan was one of the first people I met when I got into it back in, I think it was like 2020. And he has continued to be one of the sharpest dudes I think we talked to. We haven't had him on here, have we?
Why have we not had Ethan?
Why haven't I had Ethan on here?
Yeah. We'll make that happen.
All right.
You got to have him on and pitch him hard.
Yeah, I'm gonna call him.
And sponsor.
We'll call him. Yeah, he needs. Come on, Ethan, dude. We're Luxor's commercial. It seems like. So, but yeah, man. Look,
you just
go ahead.
Sorry, I was going to say one last thing. You just need to take him out for a round of golf and get some new ideas out of him, and he'll sponsor. So.
Yeah. Shoot, we gave him the whole idea on Hashrate market. You're right. Yeah. You're welcome. Thanks a lot, Ethan. Well, we'll give you some more ideas here. We're joking, totally, but yeah. Man, thank you for coming on. This has been great.
Yeah, and, thanks so much for having me, guys. Really, really appreciate it and enjoyed the conversation.
Yeah, we'll do it again.
Awesome. We'll catch you guys on the next episode.